Good evening, Wall Street warriors, and welcome back to the channel. Today, December 13th, 2025, the U.S. stock market presented a fascinating, albeit mixed, picture. We're seeing a tug-of-war between resilient tech giants and sectors feeling the pinch of persistent inflation and geopolitical headwinds. Get ready, because we're diving deep into the forces shaping your portfolio right now. The major indices closed in varied territory. The S&P 500 edged down just under 0.5%, while the Nasdaq Composite managed a modest gain, largely propped up by its mega-cap tech components. The Dow Jones, reflecting broader industrial sentiment, also saw a slight decline. This tells us a story of divergence, where sector-specific catalysts are overshadowing broader market movements.
The elephant in the room continues to be inflation, specifically the stubborn stickiness of core services inflation. Recent reports from Bloomberg and Reuters highlight that while headline CPI has cooled, underlying price pressures are proving more resilient than anticipated. This has investors bracing for the upcoming December FOMC meeting minutes, which, as the Wall Street Journal notes, will provide critical clues on the Federal Reserve's higher-for-longer interest rate stance for early 2026. The market is effectively in a holding pattern, dissecting every data point for signs of a potential pivot. Beyond economics, geopolitical tensions remain a significant factor. Ongoing conflicts in Eastern Europe and the Middle East continue to add a risk premium to energy markets and create supply chain bottlenecks. CNBC reported today on how these uncertainties are directly impacting manufacturing sectors and driving up operational costs for many multinational corporations. This backdrop naturally pushes investors towards safer havens or companies with strong domestic focus.
As we head deeper into December, the anticipation for Q4 earnings season is building. Seeking Alpha's recent analysis suggests a bifurcated market. Strong performance is expected from companies leveraging AI infrastructure and cybersecurity, while traditional retail and some industrial segments may face headwinds due to inventory levels and softer global demand. Early whispers are already setting the stage for some significant post-earnings volatility. Let's talk winners. The AI revolution continues unabated. NVIDIA, Microsoft, and Google spearheaded gains in the tech sector, fueled by relentless demand for AI chips, cloud services, and enterprise AI solutions. Cybersecurity stocks also saw a significant boost, a direct response to increased corporate spending on digital defenses amid heightened geopolitical risks. In healthcare, a major pharmaceutical company announced positive Phase 3 clinical trial results for a breakthrough drug, coupled with intriguing acquisition rumors in the biotech space, sent selected stocks soaring. Innovation is clearly being rewarded. On the flip side, we saw some notable underperformers. Consumer discretionary stocks, particularly traditional brick-and-mortar retailers, faced pressure today. Concerns over a potential slowdown in holiday spending and elevated inventory levels, as highlighted by CNBC, weighed heavily. Regional banks also continued their struggle, with Seeking Alpha reporting lingering worries about their exposure to commercial real estate and rising funding costs. Finally, the industrial sector, as Bloomberg analyzed, experienced a dip, reflecting softening global demand for heavy machinery and industrial components amidst persistent supply chain issues. So, what does this mixed market tell us? It underscores the importance of selective investing. While growth narratives around AI and digital transformation remain compelling, savvy investors are also looking for companies with strong balance sheets and pricing power to weather inflationary pressures. Diversification remains key, balancing high growth potential with defensive plays. Looking ahead, the next few weeks will be dominated by the Fed's rhetoric in early Q4 earnings reports. Keep a close eye on companies with robust free cash flow and a clear competitive advantage in this dynamic environment. That's our deep dive for December 13th. What are your thoughts on today's market movers? Let me know in the comments below. Don't forget to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next market update. Until next time, stay smart, stay invested, and build that wealth. See you soon.